So good afternoon, everyone. Thanks again for joining us to talk about tax and assessment and property tax recovery, taking time out of your busy schedules again. Nice to see you come back from yesterday's session. So if you didn't take in yesterday's session, my name's Angela Bilski, and I'm a municipal training advisor with Municipal Affairs. And my role is to help municipalities in understanding and applying property assessment and tax legislation and processes effectively. And I've been around for almost 10 years now. And prior to that, I worked in a couple of small rurals and various legislative roles. With me again, Cian Kluche and our manager, Desiree Corey. So they'll be helping with the technical pieces again and helping manage the questions that you find folks probably will have for us. So just to kind of quickly recap yesterday's session, if you had attended, and I guess if you haven't, we did talk about the grayed out sections in the tax recovery or the property tax and assessment cycle on the slide. So we started with some information about property assessment. We talked about establishing capital and operating budgets, preparation of the assessment roll, setting the tax rate, sending out the assessment and tax notices after preparing the tax roll, and various options for tax collection. Were there any questions from yesterday's session that we have to follow up with, or anything that you thought of after the session ended? I know there was a few questions about Roman Catholic or separate school declaration type things, and I did include a fact sheet in the resource slide on this presentation. So apparently it's up to date, and it might answer some of those questions about what happens if people don't fill out a school declaration and things like that, or if there's multiple owners on a property and they're different faiths or whatnot. So you might want to refer to that link if you have any of those questions, but we're happy if there's anything we missed or we didn't answer. Okay, so anything from yesterday, we're happy to look into. I did include contact information for the education tax area of our ministry that they can answer questions about school declarations and collecting the school ASFF requisition. So today we're going to look at the offshoot of the annual cycle, which is when properties go into arrears. And as you can see, the timeline, it can take up to 4 years to play out. So it's a separate process from that annual cycle. Okay. So again, I'll start off with references to the relevant legislation that governs tax recovery. And after that, we'll focus on tax recovery processes themselves. This is where we'll discuss the 3 primary methods available to municipalities for recovering unpaid taxes. So we'll talk about when each method is appropriate and the steps involved. We'll also spend some time on enhanced methods for oil and gas arrears, which have become increasingly important given the challenges in that sector. And to finish up, we'll do a quick wrap up of the key points from the session and share some resources you can use for learning or support. So I'm hoping to have a bit of a coffee break after I get through the designated manufactured homes portion of the presentation, and there might be some of you folks that aren't interested in the Division 9, like the tax recovery not related to land, as it's usually more of a rural municipality type of concept. So after the break, you'd be welcome to join in or continue on with your day, but we're going to try to address any of the questions about tax recovery related to land and DMHs before the break. I've only done the session in person. No, that's not true. I've done tax recovery sessions virtually quite often through the MATI, the program. So if you're thinking this will be anything novel to what I usually present, sorry to disappoint. but it might seem familiar to some of you. There's nothing really new that I had to do to keep it up to date, but I will be presenting on the Division 9, the tax recovery not related to land, which I don't often do because most people aren't really interested in that part, but we'll go through that today. So please ask your questions in the chat function. I did disable the Q&A because it was no bueno for our purposes to look back after the meeting. So if anything is unclear or requires more explanation, it's likely other folks have the same question. So please don't hesitate to put those questions in the chat, as we do have plenty of time. So let's get started with the first section, the legislative framework. All right, so the purpose and intent of your favorite legislation and ours, the Municipal Government Act, MGA for short, is to provide for the operation of local government in Alberta. And I did kind of touch on it yesterday, but it provides a significant amount of municipal autonomy and flexibility, and realizes that one size does not fit all when it comes to the 300 or 40-ish municipalities in this province, with vast differences in size, type, location, and population demographics. However, provisions related to tax recovery, which is the focus of today's session, are probably some of the most prescriptive or rigid of the Act, which is why this session will focus heavily on process. The MGA has certainly undergone a number of amendments over the last few years, but there has been a bit of a change to the tax recovery provisions relating to the 2021 reinstatement of special liens for linear property, machinery, and equipment. And I have a reference to a guide that explains this in much more detail when I do get to that third method of tax recovery later on. So municipalities rely on the collection of property taxes to provide services, to improve and replace their infrastructure, and to meet their financial obligations. The Government of Alberta recognizes municipalities' reliance on property tax revenue, and to ensure that everyone who is required to pay municipal property tax does so, the MGA establishes a process to ensure that a municipality can collect taxes that are due. However, land or property represents a significant, if not the largest, investment for most Albertans. So accordingly, the MGA also contains provisions that protect the property interests of Albertans, including appropriate notification requirements and time periods to make payment. So this is a legislated process. It is a must in the Act, not a may, and provides very little flexibility to modify any of the provisions, unlike other areas of the Act where there is a bit more discretion or wiggle room in certain situations. So it is something that has to be carried out, and likely does not leave many tax clerks with warm fuzzies while doing so, especially in those smaller communities. So there are 3 methods for tax recovery in Alberta that are provided for in Part 10 of the MGA. So tax recovery related to land is covered under Division 8, Sections 410 through 436. And this is also the most common method used. It's specific to titled land, which may or may not have improvements on the property. And this process can take up to 4 years to carry out. Then there's tax recovery related to designated manufactured homes, or DMHs for short, and that's provided for in Division 8.1 under those sections listed on that slide. So this method is used for DMHs situated in mobile home parks, or where the owner of the DMH does not own the land on which it is situated. And this process can be completed in 3 or 4 years, and I'll talk about the difference there in a little bit. Tax recovery not related to land is covered off in Division 9, Sections 437 through 452. This method can also be used for DMHs and should be used for business taxes, crown lease land, and some non-residential properties like linear and machinery and equipment. This method can be completed in less than 1 year and is completely different than the other 2. So it's usually the least used. However, it's becoming more commonly applied in rural municipalities for M&E and linear So it's important to understand the types of properties that qualify under each method. So as we go through these, please don't hesitate to ask your questions. And a handy resource to be aware of is our Guide to Tax Recovery, which is found on our Municipal Resource Handbook website. And for those who haven't accessed this resource before, I've included that link on our resources slide. Hopefully you've all had a chance to take a look at that resource. All right, so I'm going to talk about the timelines for tax recovery. And this, it says land on the slide, but it does apply to DMHs as well in this first section. So knowing the difference between current taxes and taxes that are in arrears is critical to understanding and applying the tax recovery provisions throughout the whole process. So what are current taxes? Simply put, they are taxes levied in the current year. So per section 334 in the MGA, taxes are considered imposed on January 1st of each year, regardless of when a municipality sends out its tax notices or applies penalties. And I talked about that yesterday. The calendar year starts on January 1 for the tax year. So municipalities can determine their own due dates for their taxes based on their tax penalty bylaw. Some counties or MDs have a fall due date to consider the time when farmers have cash coming in from selling their crops. But I'm going to use an example of a municipality that makes their taxes due on June 30th by imposing a penalty on July 1st. So if someone doesn't pay their taxes within the 6 months after the July 1st penalty is imposed, those taxes would be considered unpaid. And more penalties may be getting added, but they are still considered current as it's still within the year in which the taxes were imposed. As for arrears, Section 326 defines tax arrears as taxes that remain unpaid after December 31st of the year in which they are imposed. So regardless of when they are due in individual municipalities, taxes not paid by January 1st of the next year are considered arrears in all municipalities and may also have a penalty imposed on that balance. So this definition of tax arrears applies to the tax recovery process for land under Division 8, as well as for DMHs under Division 8.1. However, Division 9, which deals with recovering taxes not related to land, defines tax arrears differently for the purposes of tax recovery, but I'll talk about that a little later on. I've re-recorded this slide because the animations weren't captured during the live presentation. Now let's look at the timelines involved in creating the tax arrears list. It's really taken me a while to get my head totally wrapped around this concept, but I found that making it visual helps me a lot, so I hope this will help you as well. The first step is determining if a property is far enough into arrears to be added to the list. The legislative direction to prepare the tax arrears list by March 31st annually is found in Section 412. For tax recovery related to land in Division 8 and related to DMHs in Division 8.1, properties and DMHs make it onto this list if they are more than 1 year in arrears. Essentially what this is saying is any properties that are 2 years in arrears must be put on the arrears list. So for this next cycle, beginning on April 1st of 2026, properties that have any or all of the 2024 taxes plus 2025 taxes owing must be put on the arrears list. A simple rule of thumb is this question. Since the taxes were imposed on this property, have they seen January 1st twice? If the answer is yes, then it is added to the arrears list. So in this diagram, 2024 is considered year 1 and 2025 is year 2. The taxes on these properties will have seen January 1st twice and must go on the list. However, one very important thing to note is that anyone who comes in to pay at least 1 year of arrears on or before March 31st of 2026 no longer qualifies to be on the list. But as soon as the notification is registered, which is deemed to be April 1st, then all the arrears need to be paid to have that notification removed. So there might be a time lag here for owners that come in to pay their account between the day the list is put in the mail for land titles and April 1st. How can municipalities encourage people to come in and pay their arrears to avoid being put on the list? Prior to developing the list, a municipality may want to consider sending a letter to each affected property owner. Late January to mid-February would be a good time to send that type of notification. This letter will advise the owner that their property is going to have a tax recovery notification placed on the title and that they can avoid this action from occurring by paying the outstanding amount of taxes that have been in arrears for more than 1 year, which for 2026 will be the 2024 taxes. This is because taxes must be in arrears for more than 1 year before the tax recovery process is started. If the property owner pays the taxes that have been in arrears for more than 1 year, year 1 would fall off this timeline and the property would be no longer considered qualified for the arrears list. 2025 would then become year 1 and 2026 year 2, potentially to be added to the list in March of 2027. I sometimes hear from municipal staff that it's frustrating when certain owners will just pay the minimum amount they need to pay in order to stay off the list or to avoid auction. But I call that being savvy when it comes to knowing how the legislation works. Also of important note, if any affected property owners are considered farmers, please check page 2 of the tax recovery guide for information regarding notification to these owners under the Farm Debt Mediation Act, which is a federal piece of legislation. You may also wish to engage your your legal counsel for these properties to reduce the risk of legal challenges should the requirements in this other act not be met. So let's continue to discuss the timelines, assuming the 2024 arrears remain unpaid. So section 415 again says that all tax arrears must be paid by the following March 31st in order to stop the auction process. So the amount that someone will have to pay is going to change during the time periods that follow throughout the process. When the payment is made will determine the balance the owner has to pay to have the notification removed and to avoid auction. So for 2026, owners that have already been put on the arrears list that come in to pay off their balance after March 31st. For example, on this slide, say April 15th of 2026, they will need to pay the 2024 and 25 taxes before they can be removed from the auction list. So continuing on, if an owner doesn't come in to pay until after December 31st of 2026, for example, say on March 1st of 2027, they will also have to pay the taxes imposed for 3 years. So for 2024, 25, and 26. The earliest date the municipality can schedule the auction would be April 1st, 2027. So payment before this date would stop the process. And then 1 more year, if the auction isn't scheduled until after December 31st of 2027, but by March 31st of 2028, which is still within the legislated timelines, an owner would now have to pay all 4 years of arrears in order to avoid having their property go up for auction. So in this example, the municipality has scheduled the auction kind of late in the cycle, but still within the timeline, February 1st, 2028. If the owner comes in to pay right before the auction, say on January 31st, they would have to pay all 4 years of arrears. So that's certainly a lot to absorb, but hopefully it's making some sense for everyone. And in the handouts, I've included the full page versions of these last 4 slides. So if you have any questions or if something is not quite clear, please let us know and I'll try to address that. So I do have a little bit of an activity here just to give some practice in applying the information that I just covered. So in the first scenario, Mr. Smith owes $908 in 2024 and $915 in 2025. He comes in on March 6th after getting that, a letter saying he will be added to the arrears list. So how much does he have to pay to avoid going on the list in this scenario? Correct. He has to pay what's outstanding from 2024, which is 908. And then the follow-up, does he have to pay a penalty amount imposed on January 1st, 2026, which is made up of $56 related to 24 and 65 related to 25 to avoid going on the list? Usually there's penalties to consider here. So for this question, it depends on the ability of your system to age the penalties back to the year in which they were imposed. Correct? Yeah. Awesome. I did talk a bit about that yesterday. So if your system can age, then definitely that he would have to pay the penalties, but if not, they would be considered current. All right, next scenario. Same kind of situation, but this person is coming in after the notification has been registered. So how much do they have to pay in this scenario? Yeah, so they would have to pay both years. That's correct. And then in this situation, there's a few years involved. So they come in to pay on July 9th of 2026 after they get that copy of the Gazette ad. So they kind of rush into the office to pay. So how much in this scenario would they have to pay? So in this scenario, they would have to pay 23, 24, and 25. And 26 is still current. I think I got that right. Okay. Thanks for putting your answers in the chat. So now we get into after the list is completed, what steps have to be taken. So a designated officer, in most cases the CAO, must sign the arrears list and apply the municipal seal. So from my understanding, land title still requires the list to be sealed, even though any reference to a seal has been removed from the act. So now that your list is signed and sealed, the next step, of course, is to deliver it, as that song goes. So 2 copies of the arrears list must be sent to the registrar of the land titles office. And once they receive that list, they place a notification on the certificates of title for the property shown on the list. Other common terms for notifications is a caveat or lien, but the term that's used in the MGA is a tax recovery notification. So this is what legally registers the municipality's interest in that property. And the only way that the notification can be removed is if the municipality requests that it be removed. The municipality must also post the list in a place that is accessible to the public during regular business hours. And I've heard of some municipalities posting their list on the website. Which you might want to have a policy in place in order to do that, because it's not addressed in the MGA. I also hear of municipalities that put their list under glass because they've had people tampering with the list, like taking it down and whatnot. So all right, so according to section 412, the municipality is also required to send one copy of the list to the Minister of Treasury, Board and Finance for the unclaimed property program. We often hear that that step sometimes gets overlooked. And if you want to find more information about this program, there's some in our resource, the tax recovery guide has more explanation about that program. An important thing to note is that the arrears list needs to be postmarked prior to April 1st when it is received by the land titles office. So if it's sent late, then the notifications will not be placed on the properties in time, and it will be setting the municipality back an entire year in the whole process. Again, anyone who comes in to pay at least 1 year of arrears on or before March 31st no longer qualifies to be on the list. But as soon as the notification is registered, then all arrears need to be paid to have the notification removed. So I'm just seeing in the chat about that last scenario that maybe I'll go back to that for a second just to.
I'm just typing an answer, Angela, just so you know.
Okay. Yep. I believe it was 23, 24, and 25 that they had to pay. Sorry if I caused any confusion there. Yeah, they're paying 20. They didn't pay 20. It's still in 2026, so 26 taxes aren't arrears yet. So does that make it there? Make it clear? I think Des is going to put the answer in the chat. All right. So the municipality must notify the persons who are liable to pay the taxes that the list has been prepared and sent to the registrar. And this letter should be sent the same time that the arrears list is submitted to land titles. Then on the right-hand side of the slide, we have a few other provisions to be aware of. So the registrar certifies one copy of the arrears list and returns it to the municipality along with an invoice. These registration costs can be passed on to the property owner per sections 413 and 553. By August 1st, the registrar of the land titles office must also send a notice to the owners on the list, as well as any parties with interest or encumbrance on the certificate of title, that if the tax arrears are not paid in full by March 31st of the following year, the property will be put up for auction and the municipality may own it if it is not sold. So section 414 sets out that once the notifications are registered, no improvements can be removed. So that notification letter sent out by the municipality at the end of March should indicate that little nugget of information as well. Section 416 is available to municipalities if they know that a property is being rented out and they want to collect the rent from the renter in order to apply it to the outstanding arrears. They must notify the owner 14 days before the notice is sent to the renter to pay the rent to the municipality. I have heard that some municipalities have tried to take advantage of 416 with maybe varying levels of success, but it is something there that's in the legislation. Also, 418 talks about tax agreements. I know someone asked about this yesterday. So a municipality may enter into a tax agreement with the owner of a property at any time prior to the public auction to pay off the arrears over a period of up to 3 years. So while section 418 sets out some general parameters with respect to the timeline of that agreement, a municipality should really have a policy in place that sets out more specifically how and when a municipality will enter into an agreement. This ensures consistent treatment of all owners in arrears. If the municipality is willing to allow for this option, perhaps you could include that in the notification letter as well. And an agreement ends when the term has expired or when it is breached by an owner missing a scheduled payment. So from our perspective, there are no provisions for second chances or third or fifth chances that we sometimes hear about. If the agreement is breached, the tax recovery process resumes where it left off. So your agreement should specifically address this as well. So I've mentioned this section a few times already, but I'll just say it quickly again. Section 415 states that all tax arrears must be paid by the following March 31st. Again, the amount that someone will have to pay is going to change during the process, like was demonstrated in those scenarios. So as tax arrears are paid in full, the properties can be struck from the auction list. Additionally, a request must be sent to the registrar at Land Titles to have the notification removed. So you can find that form on Service Alberta's website on the Land Titles Procedure Manual page. Just remember to ensure that you wait for payments to clear the bank before you remove the notification so that you don't end up having to start the whole thing over again if someone should come in with an NSF check, for example. Also, it's a good idea to run your tax recovery list every month and maybe even more frequently when you get into March and around your sale date, so your file notification reconciliation stays current. You want to be able to tell people what they owe. Give them the right amount. So if you keep your records updated as much as possible. All right, any questions? I think everything's being answered as we go. Thanks to Lucian and Des.
Angela,
Mm-hmm.
there actually is one here that I didn't answer.
Okay.
Is rent, something about rent. Does rent also mean oil lease money? I don't know if I might need some clarification on that. I don't know what they're asking.
You mean on a farm property that has a lease? Oh, like a.
I don't know, Cherie, does rent also mean oil lease money? I'm just some clarification. Oh, yeah, we've got something in the chat now.
I'm not sure if we have had that question before, to be honest. Maybe we'll have to look into that a little bit more. Because it's likely that.
I mean, it sounds like rent to me that they're paying, a lease payment. Rent sounds like yeah, it sounds like rent to me.
Interesting. All right. Yeah, maybe I'll try to check on that later, or I don't know if we can check into it anymore, but something good, interesting to consider. So now let's look at the timelines involved with proceeding to the public auction. So for this upcoming cycle, again, if 24 and 25 tax arrears remain unpaid by March 31st of 26, then the municipality must start preparations for a public auction. Again, notice that I use the word must, not the word may. So one suggestion would be to develop your calendar starting with the proposed sale date set by administration, and then work backwards to build in all the required notification and advertising timelines. Again, for the properties added to the list in 2026, the auction must be held between April 1st of 2027 and March 31st of 2028. If the municipality doesn't conduct the auction within this 1-year window for whatever reason, an extension from the minister could be requested to conduct it at a later date. So there's information in the tax recovery guide for making such a request, what it needs to include. After the date has been set, council is required to set the reserve bids, and the conditions of sale by resolution. And conditions vary between municipalities, but these could include cash only or a certain percentage down and a total payment by a certain date. And there may be other examples out there that people use. Again, it may be beneficial to have a policy in place to deal with these conditions so that they remain consistent from year to year. What information does council need in order to set the reserve bids? So the assessor or an independent qualified appraiser should conduct market valuations on all the properties that are going up for sale. And that should be done as close to the sale date as possible in order to capture true market value. And that's quite an important step that shouldn't be missed in mitigating risk to a municipality if a property is sold below market value. And if that happens, the risk involves an owner initiating a legal challenge, which could result in the courts ordering the municipality to make up the difference between the actual market value and the price it was sold for at an auction. So that's just a little bit of extra protection to have those valuations done close to the sale date as possible. Section 421 sets out the requirements for advertising a public auction. It's important to note that if you have an advertising bylaw under section 606.1, you can't use it to modify these requirements in any way. You have to stick to exactly what's laid out in this section. And we do get questions about newspaper ads as well. Sometimes newspapers just switch over to digital versions, and municipalities ask us if that qualifies or if that meets the advertising requirements, but we suggest that you check with your legal counsel on that just to make sure. Also, an ad has to appear in the Alberta Gazette not less than 40 days and not more than 90 days prior to the auction date. So you want to make sure you allow lots of time for submission and publication, as the Gazette is only published twice a month. So you want to give yourself more than that minimum 40 days to allow for anything unforeseen that might pop up and make you not be able to meet this timeline. And as well, the ad must also appear in a newspaper having general circulation in the municipality, not less than 10 days and not more than 20 days from the date of the auction. You must also send a copy of the Gazette ad to the owner and any parties that have an interest in the property. So everyone who is listed on the certificate of title, not less than 4 weeks prior to the auction. So like I said earlier, this usually stimulates some people to come in and make those payments. So I mentioned the digital newspaper. Want to have your lawyer maybe help you assess the risk of being challenged if you have it only in a digital newspaper. Also, there's currently no provision for a public auction to be held virtually. Maybe that's another question for your legal folks, as we sometimes hear of some municipalities wanting to use virtual auctions, but it's not specifically addressed by the MGA yet. Another question we often get asked is, what if the registered owner is deceased? We get asked what extra measures can be taken to find and notify the executor or family members. It's important to ensure the municipality is dealing with the correct person or persons concerning the estate. So especially in those small communities, municipal staff may have firsthand knowledge of the family members of the deceased owner. Again, you may want to have a policy in place to deal with this in order to ensure all property owners are treated consistently, fairly, and in accordance with the new access to information and protection of privacy legislation. So when we get into talking about holding the auction, we get a lot of questions about who can be the auctioneer for the public auction. So for taxes related to land in Division 8, there is no need to hire a qualified or certified auctioneer. So usually the CAO can typically conduct the auction. However, for DMHs and taxes not related to land in Divisions 8.1 and 9, We have become aware of a requirement to hire a qualified auctioneer, not under the MGA, but under some other legislation, I believe the Consumer Protection Act, or there might be another one that comes into play as well. But actually for DMHs, the legislation is not 100% crystal clear that a certified auctioneer is required, but our messaging would be that play it safe and use a certified auctioneer for DMHs. There's also legislation that says a certified auctioneer must be the one that does the advertising for auctions involving goods and DMHs. So this is also something you may want to look into further and perhaps amend your policy or process. So I'm not going to get into a whole lot of detail in this session about holding the auction itself, but there are a couple things I'd just like to mention quickly. And there's information in the tax recovery guide. There's a whole kind of list of considerations. But just to highlight, to remember to start the auction by listing all the rules, method of bidding, acceptable payment, conduct, what happens at the close of auction, all the steps involved. So it's a good idea to have a procedure or even a script written up for this. So like I said, our manual has some additional information at the appendix near the end. It's important to introduce each property and provide full disclosure. Is someone living in it? Is there some type of known contamination? Is it vacant but still full of the owner's personal possessions? So this information could affect a potential buyer's decision, and making these details known as much as possible could possibly mitigate risk to the municipality. Also, sometimes there are good reasons for postponing or adjourning a scheduled auction. Maybe the arrears were paid the day before, but the check hasn't cleared yet. Maybe you missed getting the ad into the paper to meet the requirements, or maybe an estate is very close to being settled. So Section 422 allows an auction to be adjourned to within 60 days of the advertised date. The notice advising of the adjournment must show the new auction date. If the owners of all the properties on the list come in to pay their arrears, everyone's very happy. A notice would be posted canceling the auction. And finally, there are some restrictions on who can bid on or buy a property at an auction. So Section 429 restricts the auctioneer, councillors, the CAO, and the employees of the municipality from bidding on or acting as an agent for someone in buying the property. However, a designated officer or employee can be directed by a council resolution to bid on or buy a parcel of land for the municipality if it wishes to become the owner. Great. Again, I think questions are being answered on the go.
Angela, they're coming in hot, so we're trying to keep up.
Okay, well, I appreciate that. So just this latest question from Joanne, if the tax notification is already placed, but later on the owner pays the whole arrears. So during that lag time between when the list was sent in and when the payment is made, then yes, you would have to cancel that notification. And yeah, if they come in before the auction and pay everything up, then the municipality requests that the notification be removed from their certificate of title. I think that's what that question was about. Thank you everyone for putting your questions up and keeping Des and Lucian busy. All right. So now let's take a look at what must happen if someone buys a property at public auction. So if it's sold to a private individual, the municipality will submit a transfer of title by submitting a notification of sale by public auction form. And an affidavit of value form to land titles. The property is considered to be free and clear of all liens except for certain encumbrances listed in section 423. Things like certain registered easements through land titles, VRA issues, utility liens, things like that. And those things should have been disclosed prior to the property being auctioned, so there are no surprises for those interested buyers. But again, yeah, it's a bit of a buyer beware situation in these types of circumstances. Section 427 sets out that all proceeds must be deposited into a separate account for each property sold. And that section also outlines the order in which costs or expenses get paid before any surplus is distributed. So first on the list is any remedial costs, then the tax arrears, then lawful municipal expenses like legal fees or land titles fees, charges owing to the Crown under Section 553, things like unpaid utility charges or charges to extinguish a fire. And then last is the 5% administration fee. So this also makes it easier to track all of the costs for whatever expenses need to be paid, having that separate account. And the municipality must notify the previous owner if there are surplus proceeds, and if the municipality is satisfied that there are no other debts, it may pay out the surplus funds. And if they are not satisfied, or if there are any types of complexities with the file, then Section 428 outlines the distribution of sale proceeds through the courts, so that any person feels they are entitled to part of the surplus money or all of it may apply for it using the provision. So in this case, the municipality is required to hold the funds in trust for 10 years. And Joanne also had a question about if you miss the step of sending the arrears list to unclaimed property. I'm not sure if there's any consequences to that, but maybe you have some insight?
We'll get to it, Angela. Sorry.
Okay.
Yeah, thanks.
Thank you. Okay, so the next slide is what happens if the property doesn't sell, and that's probably the more typical scenario, that it doesn't sell at auction. So what options does the municipality have if no one was interested in buying the property? So the first option is the municipality can purchase the property outright. Perhaps it's a property that would benefit the municipality by owning for whatever reason. Say the municipality has a specific use lined up for property that can benefit them in some way. Maybe there's a property right next door to the municipal building that could be used for a parking lot, for example. If the municipality buys that property, the same rules apply as if it was sold to a private individual at the auction. So the title is transferred through land titles, a separate account is made for the proceeds and expenses, and any surplus must be paid to the previous owner. Another option is that the municipality may take title retaining the tax forfeiture clause. This means the municipality must protect the previous owner's interests for up to 15 years. Once the 15 years have expired, the municipality becomes the owner free and clear. But during this time, the municipality may sell or grant a lease, license, or permit in respect of the property. If the municipality sells it or leases it, proceeds must still be deposited into a separate bank account. So some things to think about in this scenario to take tax forfeiture. What if someone's personal belongings remain on the property? What if renters or owners continue living on that property? What maintenance needs to be done with the property to prevent it from deteriorating and gradually losing its value? What does taking possession of the property actually mean? So you're going to be changing the locks, getting insurance coverage, paying the utility bills. So there's lots of things to think about there, and usually it's best to review all these items with your legal counsel to make sure you're covering all those bases. If a municipality takes tax forfeiture title, the property is treated as tax exempt. So I've heard at a conference that penalties could potentially still be incurred on the outstanding arrears for prior years, as they should technically be aged accordingly, but this may be too challenging to carry out depending on the system you use for aging penalties. And the third and final option is to do nothing. So this option does not start the clock for the 15 years as it does in option 2. The property remains accessible and still accumulates taxes. So why would a municipality do nothing? There could be a number of reasons, environmental contamination, for example. So you might be thinking that this slide is a bit skimpy on how a municipality determines which option would be the best course of action, but the reality is that there are unique circumstances associated with each property. And it's often best to have a qualified legal advisor or counsel thoroughly review the file and provide their qualified opinion on what option would make the most sense for the municipality. And that's important to mitigate any potential risks as much as possible in taking tax forfeiture in a situation that's not great. All right, so these next slides, I just have a summary of the timelines here. So this is prior to this is the arrears list type of timelines. And then the second slide is the proceeding to auction, who does what and when. And I think I have that in the handouts as well, bigger versions of these slides. Okay, so I'll just take a moment, see if I think all the questions in the chat are being kept up with. Hopefully everything for that section was clear. Right, so we'll move on to do designated manufactured homes, DMHs for short. So the MGA does define what a DMH is under Section 284. It means a manufactured home, mobile home, modular home, or travel trailer. Again, Division 8.1 is used for DMHs situated in mobile home parks or where the owner of the DMH does not own the land on which it is situated. In other cases where the owner of the DMH owns the land on which it is situated, the DMH would be considered an improvement and it would be taxed in the same way as would a property with a house on it. So the tax recovery process for DMHs is very similar to land, as in taxes that are more than 1 year in arrears must be put on an arrears list. If your municipality chooses to use this method instead of method 3, then the municipality needs to make 2 major policy decisions. So the first one is a DMH may be also added to the list if it is less than 1 year in arrears. And that's section 436.03. So this is a policy decision made by the municipality, and the policy should outline the circumstances required by the municipality to take this action, such as when does administration add them to the list? Are all homes treated the same way every year? And if no such policy decision is made, then the default timeline is the same as tax recovery related to land. Another policy decision that can be made, I think I might have mentioned this yesterday, is whether the municipality wishes to make the mobile home community owner responsible for the taxes for all the DMHs within it. And then this cost would then be passed along to each DMH owner, most likely through increasing the lot rent. So some municipalities have found that this greatly improves their tax collection rates, even though it can be a controversial decision, especially from the perspective of park owners. So it's section 304.1 J2 allows the council to pass a bylaw to put this policy in effect. The bylaw requires advertising and can't be put into effect until at least a year after it's passed. Another subsection in 304 sub 1 allows councils to pass a bylaw saying DMH owners are responsible for the tax for DMHs located on a parcel of land not in a mobile home community. Okay, I think I repeated that, sorry. Yeah, so a bylaw is required to make that policy come into effect. All right, so tax recovery for DMHs is very similar to tax recovery related to land, but there are a few primary differences, those being, first of all, how their municipality registers its interests. Secondly, advertising requirements, and third, the use of a licensed auctioneer. So in this method, you'll also need to build an arrears list, but first determine whether the property qualifies to be on the list, as I had demonstrated early on. Prior to creating the tax arrears list for DMHs, the municipality must obtain the serial numbers for each one. Your assessor should be able to provide this number, but a designated officer may also enter the property to get it. So if you can't obtain the serial number, you can contact the Modular Housing Association, Prairie Provinces, to have them assign a new serial number upon completion of the appropriate request form. You'll also need the year, make, and model of the DMH. The municipality must fill out a financing statement for each DMH and file each statement with a registry agent. So you don't use land titles, you use registries to apply the tax recovery lien on the DMH, also known as a statutory charge at the registry's office. So those forms are available on Service Alberta's website, and this is what will formally register the municipality's interest in the DMH. The tax recovery guide includes much more detail on the forms and processes involved in registering these liens. It also includes a sample arrears list as well as a step-by-step checklist. Again, you probably want to send out a letter 4 to 6 weeks before developing the arrears list to affected DMH owners advising tax recovery proceedings will be started unless the tax arrears are paid up. All right, so a copy of the arrears list for tax recovery related to DMHs must be posted in a place that is accessible to the general public during regular business hours, which is generally the municipal office. Again, as the full payment of tax arrears are made, the DMHs may be struck from the list. And this list does not need to be sent anywhere else. Once the tax recovery lien is registered, the municipality must send a letter to notify the owner that a lien has been placed on the property, a letter to the park owner, and a letter to each person who has an interest registered against the DMH, and that must happen prior to August 1st. So you'll be required to conduct a search of the personal property registry in order to determine if there are any other parties that have a registered interest. Tax agreements as well, same idea as the first method. People can enter into them if the municipality is willing to do so. Probably best to have a policy. And if the DMH is rented out, again, same process for the municipality to collect the rent, but notice of that must also be sent to the park owner. So if the tax arrears remain unpaid by the next March 31st, then the municipality must start preparations for a tax sale, public auction. Again, building your calendar here backwards, deciding from when you're going to have that sale. And you can arrange to have auctions for both land and DMHs at the same time. First, administration sets the auction date and determines the timelines for advertising. Then you'll need council to pass a resolution to set the reserve bids and the conditions of sale. So same as I had just spoke about earlier. So in this method, you don't need to advertise in the Gazette, but you must advertise in a paper with local circulation not less than 10 days and not more than 30 days before the auction. So you want to send a copy of the ad, like probably the proof you get back, to the owner, the park owner, and interested parties not less than 4 weeks before the auction. And again, you need to do a registry search on the serial number to find out who has interest in that DMH. For holding the auction, pretty similar to tax recovery related to land, but as I mentioned earlier, you may or may not need a licensed auctioneer under the Consumer Protection Act. So to mitigate any risk of a challenge, we recommend playing it safe and using one. So adjournment of auction to within 60 days is also an option if you need to postpone for some reason. Allowing the check to clear, estates to settle, things like that. The notice must show the new auction date. Same rules for prohibited bidding and buying apply as well. So if the DMH is sold at auction, the municipality will issue a bill of sale and discharge the tax recovery lien and other claims by registering a financing change statement with a registry agent. And if it's sold, Section 436.17, the municipality must pay in order of priority the tax arrears, any lawful expenses related to the tax recovery process, and an administration fee of 5% of the sale amount. Then you can notify and pay the previous owner any funds that are remaining after those costs are covered, if anything. Section 436.18 requires searching the personal property registry for encumbrances. So if there are any listed, then you can pay them out and then pay what's left to the previous owner. And again, if you're not satisfied that you have everything covered, you can notify the owner that they may apply to the court for the remainder within 5 years. So if no claim is made, the municipality may use the money for its own purposes. And if it's not sold, the municipality may sell it, purchase it, or grant a lease in respect of it. When disposing of an unsold DMH, the municipality is obligated to sell it at a price as close as reasonably possible to the market value. And some options regarding this sale include a direct sale, sale by tender, or sale through a real estate agreement. After 10 years, the municipality becomes the owner, free and clear of all encumbrances. Just like in land, a separate account is required for depositing of the funds from the sale of each DMH. All right. A couple other things to finish off this section before we go on a bit of a break. What if someone pulls up stakes and moves their DMH to another municipality? Maybe this is more likely to happen in the dark of night. So if a DMH is moved to or its site becomes part of another municipality, the other municipality must continue the tax recovery proceedings. The designated officer of the receiving municipality should ensure that a financing change statement is registered to list the new municipality as the secured party. So that new municipality must continue with proceedings, and if they receive sufficient funds, they must provide the original municipality with the costs they incurred in connection with the tax recovery proceedings for the DMH. Also, in terms of reporting, A manufactured home community must provide monthly reports to the CAO on ownership, including serial numbers for the units and in and out movement. So how often do these have to be submitted? The frequency of these reports can be changed by bylaw, but this cannot be made more often than once a month. All right, so again, I have a summary of a timeline here showing all the dates. This will only apply if you're not creating the arrears list after less than 1 year. Obviously, if you're doing it after 1 year, then it's a different timeline altogether. And again, you probably want to have a policy if you're considering using that more expedited timeline. This is for the auction. All right, so that covers the first two methods. Seeing if there's any questions before we go on the break. And again, if you're not interested in tax recovery not related to land, don't feel obligated to stick around. But after the break, we will cover that section. All right, so I'm just waiting for my helpers here to let me know what's up with the questions. I see most of them have been answered. That's a good question about the DMH park owner still having to report if they have if the park owner is responsible for the taxes. There's a question about process for tax auction if the municipality takes title and there's someone living on the property and they refuse to leave. There is a section in the Act that authorizes the municipality to be able to use the courts to have folks leave the property.
Hey, Angela,
Mhm.
we are just trying to catch up. So
Okay.
everybody is super engaged. We love it.
Thanks for
But
your patience, everyone.
yes, we
Thanks for the
do.
questions.
We're just trying to make sure we're getting good
Mhm.
information out there. So yeah,
Okay,
thanks.
thanks, Des. All right, so we'll take a 10-minute break before we cover Division 9. And meanwhile, we'll look into some of these questions. So I'll start again at 228. So I'm going to provide more of a general overview of this method as it's obviously less commonly used as compared to the first two. So it's going to be more so highlighting the differences than getting into specific details of the process. But before I get into that, I just wanted to update you on some of the enhanced measures aimed to help municipalities with unpaid oil and gas property taxes. I don't know if it's much of an update, but just to touch on what's happening in that area. So I mentioned earlier in the presentation in 2021, the province amended the MGA to clarify that municipalities have a special lien on linear and machinery and equipment property used by oil and gas companies. It not only secures payment of taxes by tying up the taxpayer's property, but also gives those taxes a special priority status in comparison to the claims of other creditors. So there's a guidebook that the RMA and Brownlee put out that describes how to utilize special liens to recover taxes and how a special lien aligns with other tax recovery tools, such as the public auction processes outlined in Division 9. And it also has lots of information about tax recovery in general, so I think it's really worth a look at that resource. Secondly, a couple ministerial orders I see issued in the last few years by the Alberta Energy Ministry to the Alberta Energy Regulator builds on other actions already taken to help municipalities address unpaid oil and gas property taxes. So there was a mandatory condition for approving new well license transfers between companies or granting new well licenses to companies. Under this process, applications will be closed if a company has a cumulative provincial total of unpaid municipal taxes above the threshold. And I believe that's $20,000 is the threshold. So there's some links on this slide if you want more information on that. So this program obviously depends on collecting arrears information from you fine tax folks out there, which puts a little bit more work on your plate. But hopefully it's providing more of an incentive for companies to stay on top of their unpaid taxes going forward. Also, the Provincial Education Requisition Credit, or the PERC program, provides municipalities with an education property tax credit equal to the uncollectible education property taxes on delinquent oil and gas properties. So under that program, municipalities were no longer required to write off uncollectible property taxes as bad debt to qualify for the PERC credits. So it has kept being extended every year, but I guess it will depend on the budget that's coming down today, actually, whether or not that will be extended for another year. There's also the designated industrial requisition credit that deals with DIP properties, designated industrial properties. So that's a secondary program as well. So if you need more information, there's a link on that slide. All right, so just to get into a little bit more about Division 9. Tax under this division is defined as a business tax, well drilling tax, community aggregate payment levy, and those items identified in the multiple subsections in Section 304 that are shown on the slide. This includes things like machinery and equipment, linear property, crown grazing leases, improvements on non-assessed property, etc. So it's quite technical on what it applies to, and that's in Section 437 as well, the definition. So again, this process is completely different compared to the first two we discussed. This method is all about seizure of personal property and goods as opposed to registering an interest in a parcel of land or a DMH. And personal property can include a wide range of items such as vehicles, office equipment, recreational vehicles, household goods, machinery, aircraft, etc. When using this method for tax recovery on a DMH, the municipality is still seizing goods, not the DMH itself. This process can be used to recover taxes in a much shorter timeline, usually less than 1 year. So I mentioned already that the tax arrears are defined differently in this method. Section 437 is specific to tax recovery not related to land, and arrears are defined much differently. For tax imposed on linear property, machinery, and equipment, or property referred to in Section 304 1F, the period of payment used to be 14 days following the tax notice mailing date for a resident of a municipality and 30 days for a non-resident. In 2021, this was increased to a period of 120 days. For any other property under Division 9, the period of repayment is still 14 days following the sending of the tax notice for residents and 30 days for non-residents. So again, quite technical on the different types of property here. Tax arrears in this instance are defined as taxes that remain unpaid after the period of payment. It's also important to note that the tax notice must indicate and allow for the correct period of payment before this method of tax recovery is used. Late penalties can be imposed no sooner than 30 days after the tax notice is sent out. So there's no arrears list for this method, but there is still a public auction. So section 438 outlines two ways to seize property, either by distress warrant or by way of any other act or common law right. However, the act only goes on to explain the distress warrant path. The common law right may include collection agency under the Civil Enforcement Act, for instance. So there is a couple different ways to do this. So to start the process off, section 439 allows for a distress warrant to seize goods belonging to the person liable to pay the taxes, which is the assessed person. Again, if you're not clear on who the assessed person is for some of these more complicated situations where land isn't involved, you can refer to section 304 to get your answers there on who's actually the assessed person for each type of assessed property. A distress warrant is a formal authorization from the municipality to enforce the collection of the tax arrears through the seizure of personal property. Who can issue a distress warrant? A staff member can be appointed as a designated officer to prepare and issue the warrant and seize the goods, or a civil enforcement agency, sheriff, bailiff could also be used. So the distress warrant needs to include a whole list of relevant information regarding who is authorized to act on behalf of the municipality, the amount of debt to be satisfied, from whom the personal property is being seized, etc. The distress warrant must place sufficient goods under seizure to satisfy the claim shown on the warrant. And this includes the value of enforcement and other legal costs, including civil enforcement costs. So for example, a person owes $8,000 in tax arrears. If they have a house valued at $180,000, for instance, the civil enforcement agency cannot place the house under seizure. If that person has a boat valued at $3,000, a stereo valued at $1,000, and a truck valued at $5,000, those items could be seized because their total value is equal to the person's tax arrears. Or a motorhome valued at $9,000 could also be seized to satisfy the tax arrears. A house probably isn't a good example in this instance because I don't think it would be considered a good, but say they had a really expensive motorhome for $180,000, you can't see something that's way over value. You have to stick to what the value you're looking for. So while not a requirement of the tax recovery process, it would be prudent for the municipality to have an independent appraiser determine the value of the goods at the time of seizure. So here are the categories of goods that may be seized under a distress warrant as set out by section 441. So goods belonging to the person who is liable to pay the tax arrears or in which that person has an interest. Goods of a business that is liable to pay the business tax arrears, even if the goods have been sold to a purchaser of the business. And goods of a corporation that are in the hands of a receiver appointed for the benefit of creditors, an authorized trustee in bankruptcy, or a liquidator appointed under a winding up order. And if a person who is responsible to pay the taxes is storing goods for someone else, the municipality must not seize those goods. Therefore, it's prudent to check on the ownership of the goods the municipality is seizing. It's also recommended to seek legal advice to ensure any requirements under any other provincial and federal legislation are met. Also, remember that goods located outside of the municipal boundaries may not be seized. So when serving the distress warrant, the server must also have a number of items, including a notice of seizure and personal property form, which identifies the person whose personal property is being seized and lists the property being seized. A notice of objection to seizure of personal property must be provided at the time the notice of seizure of personal property is served. And then there's what's known as a bailie's undertaking. So that's if a designated officer or civil enforcement agency is placing goods under seizure, they may ask the person who owns or has possession of the seized goods to sign a bailey's undertaking. And that's an agreement between the municipality and the person whose property is being seized, or in the case where a third party is storing property for the person whose property is being seized, that person. So you'll find all of these forms in the civil enforcement regulation. So any person may pay the arrears until the goods are sold at public auction. If the arrears are paid, the seized goods must be returned. The municipality may collect rent from any property owned to cover the business tax arrears. And some important differences in this process as compared to the first two, which is advertising the auction. Advertisement must be posted not less than 10 days before the date of the auction in at least 3 public places in the municipality near the goods to be sold. The advertisement must specify the date, time, and location of the auction, a description of the goods to be sold, and the name of the person whose goods are to be sold. The ad must also include any conditions of sale. Cash down, cash only, things like that. So unless the municipality has started another type of legal action under any other act or common law right, the municipality must hold a public auction not more than 60 days after seizing the property. Unlike the first two methods, there is no time period for adjourning the auction specified in 446. So the municipality may adjourn the public auction by posting new auction notices, including all the new information in at least 3 public places in the municipality near the goods, showing the date when the auction will occur. So adjournments are often put in place to extend the time so that the auction will fit within advertisement or notification requirements when those requirements are in danger of not being met. If payment is made shortly before an auction, the municipality should adjourn rather than cancel the auction to ensure that the check clears the bank. For holding the auction, the municipality must hire an auctioneer to conduct the auction. So under a Public Auctions Act regulation, goods taken in distress for the recovery of tax must be sold by a qualified auctioneer. Once the auctioneer declares the goods as sold, the sale is final and no further approval is required. The municipality should maintain a record of sale activities for reporting to council. When no report is required, while that report isn't required, I should say, a report provides council with information in case a sale is challenged in any way. So if the goods sell, this looks much like the other two tax recovery methods. A separate account must be made, expenses are paid in a specific order, and surplus proceeds must be paid to the previous owner. A separate account specifically established for Division 9 tax recovery proceeds must be made and paid in order of priority. The tax arrears, any other lawful expenses incurred by the municipality in respect of the goods, things like civil enforcement, agency fees, advertising costs, auctioneer costs, those types of things. And then section 450 says that if there are any funds remaining, the municipality must notify the previous owner that there are surplus funds and that the owner may apply to the Court of King's Bench for the money. So this application may be made within 5 years after the date of the public auction. Section 448 states that the municipality becomes the owner of any goods offered for sale, but did not sell at public auction, and it may then dispose of the goods by selling them at a later date. All right, so here's another timeline summary for Division 9. Plus, I've also included a bit of a table that compares all 3 methods, the differences and similarities between them. So I believe that's in your activity handout for future reference, or if I guess I think I put a blank one in the activity handout, but yeah, there's in the slide handouts, there's this information. So that's all I had for the Division 9 stuff. I do have some multiple choice questions. Just for fun. So unpaid property taxes from a given year officially transition from being current to being in arrears as of January 1st of the next year. What is the primary mechanism used to seize property under Division 9? Would be issuing a distress warrant. So if a property with land is sold at public auction for more than the amount of arrears and costs, what happens to the surplus funds? So we talked about separate accounts for 10 years at least. And then for a tax recovery public auction related to land, a key advertising requirement. And it's the first one, the Alberta Gazette for taxes related to land. All right, and then I had the list of resources you can always turn to if you have any further questions. And you can certainly give us a call or send us an email to discuss anything we talked about in the last couple days. Always happy to chat. That's what we do all day, every day. Plus, I added the information on the education property tax area if you have questions about the school support, as well as a fact sheet for school support. Notice that might answer some of the questions that we had gotten from yesterday. Again, you should be able just to click on the links and they should come up for you. All right. Hopefully that was beneficial. Lots of information. Thanks again for the questions. I think if you have anything further, please pop it up in the chat. And if there's anything that wasn't answered in the chat, maybe put it up there one more time. All right, so the question with a DMH only in arrears that has been more than 1 year. Okay, so if you have a policy that allows the municipality to put a DMH on the arrears list with less than 1 year's of arrears, it's a different timeline, but if you don't have the policy, it's the same as land. So they would have to be 2 years in arrears to be added to the list. And if they owe 24 and 25, and if they pay 24, then they wouldn't be added to the arrears list. Hopefully that answers your question, Angie? Any other questions we can clear up before we sign off? But thanks so much, everyone, for attending again today, and thanks for your participation and your questions. Again, just reach out to us if you want to chat further. Thanks again. Enjoy the rest of your evening. Have a great weekend.